Hello everybody, this is Evelyn Henry of TaxPlus, and today I want to talk to you about something a little bit different. As I was looking around the IRS website trying to get some updates or some ideas of some of the new changes for the 2008 tax year, although nothing has been finalized, I came across some information on charitable contributions. And although this information was in effect for the 2007 tax year, I thought it was important to go over this information because I realized that a lot of us do give charitable contributions, and we are entitled to take a deduction for those during tax time. But it's important to know that in order for you to take a deduction, it must be to a qualified organization, and just giving cash or items to individuals who may be needy and it is considered charity, you will not be able to take a deduction for those. So if you plan on taking a deduction for those contributions, they do have to be going to a charitable qualified organization, and some of those are religious organizations, educational, scientific, even some federal charitable organizations, the Red Cross, Salvation Army, just to name a few. There's a long list. And the IRS has been adding some specific rules to those contributions and the deductions for those contributions, whether they're cash or non-cash, and we'll talk about cash first. The IRS states that in order for you to take a deduction for a cash contribution, and that's any amount, they require that you have records, and you keep records, which can include bank statements, canceled checks, credit card statements, and they want you to have the name of the organization, the date that you gave that amount, and what the amount is. Now, the difference is that prior to 2007, they didn't require that you had that detail, all those details, until the cash amounts were $250 or more. And as you see, it's a growing trend where the IRS is requiring that you keep more specific details about some deductions that you plan to take. Now, when those cash contributions are $250 or more, then they want you to have a written statement from the organization describing the items or the amount that you gave, the date you gave the contribution, the name of the organization, the location, and also if it's non-cash, then they also want you to make sure that in order for you to take a deduction for non-cash contributions, they have to be in good working condition. Also, they want you to have specific records about the date you gave that contribution, what the items were. And if the items are worth $500 or more, then there's also another form that you have to include with your tax return. It's the 8283, and it requires that you include specific information about the organization, what's the name of the organization, the location, what were the items, the date, how you acquired the items, what condition they were in. They want you to give a description of the items, and they also want you to enter the fair market value of the item. Now, it's up to you basically to give a value to the items that you're giving away, because I know when I give items to an organization, I request a receipt. They give you a receipt, but they don't really note on there how much the items are worth, because they don't really know how much the items are worth. It's up to you. But I do get a receipt that shows the name of the organization. It has the date, and then I myself, I can write it right on there, describing, how many bags it was, what household items they were, and how I value them. I enter the value that I give to those items. And as you see, the IRS is really cracking down. They are requiring more and more information. I see a trend here happening because a lot of times people are estimating and they're not even really keeping records. I know I used to have some clients, when I asked them about how much they gave as charitable contributions or items that they gave, they would ask, what's the limit? What's the most that I can take, before the IRS would ask. But those days are gone, because now you are expected to keep records and have specific records. And most of these you don't have to send in with your tax return unless the items are $500 or more that you're giving away. Then you have to include that form. But the IRS requires that you have these records if they ever ask you for them. And that's not only on the federal level. States are also requesting additional details for charitable contributions. And I'm not saying that they're going to ask you for all that information, but I think it's a good idea to be proactive and have all this information beforehand, because it's easier to have that information now and store it away than try to backtrack and get the information later if it's requested. And again, like I'm always talking about keeping good records, and then this is just another part of that. And you are entitled to those deductions, so make sure you keep good records and take advantage of all the deductions that you are entitled to. And that's it for right now. I will continue to give you updated information as I get it from the IRS. Please take a look at our website at TaxPlus1040.com, and I'll be updating that information as I get that from the IRS with new information for the 2008 tax year. Thank you very much for listening. Again, this is Evelyn Henry from TaxPlus. Bye-bye.